Hello and welcome to this daily market commentary on Monday, June the 10th, 2019. I hope you all had a good weekend, got some rest, had a chance to look at what happened last week and formulate some views for this week. After the moves we saw on Friday, certainly on the crypto side of things, where crypto gets a little bit sidelined on NFP Friday, just because obviously there's so much going on in the other markets that we look at. But crypto had one attempt to trade a little bit higher. We saw Bitcoin, we saw over 8,000. We also saw Ethereum rally over $250 at one point as well. So it was a little bit surprising that over the weekend we saw the sell-off in the crypto markets, with Bitcoin dipping to 7,600 and Ethereum dipping as low as $223. I think a lot of that was really just down to the fact it was the weekend, thin markets, lack of liquidity, maybe a few weak stops in Ethereum below the 232 level. But for today, after those moves, you might think, well, maybe we get a bit of a follow through. We'd expect to see a bit of a follow through from the dollar weakness on Friday, and also from the crypto weakness over the weekend. If you'd have thought that, you would have been wrong. Monday has actually turned out to be a real day of reversal. Certainly, starting with crypto, we've seen Bitcoin back up above the 8,000 level. We've seen Ethereum back up to 248, I think was the high on the day so far. And we've seen something like Litecoin has traded up as high as $129, which is a new high for this rally. And I'm referring to the rally since beginning of April, when Bitcoin kind of started to lead the way above 4,200. So demand is still there on dips for crypto. It is resilient, and even though the pullbacks can be a little bit sharp and probably a little bit unnerving for those that are holding long positions, there still seems to be plenty of money willing to buy the dips. On the FX side of things, reversal day. We had the weak non-farm US non-farm payroll number on Friday. We saw the dollar dip almost unilaterally across the board. You might have thought we'd see some follow through to start the week off. That has not been the case. We've seen dollar yen rally back up as high as 108.70. We've seen euro fall back down to 112.90, and we've seen sterling back as low as 112.65. We've also seen the Australian dollar, which broke through the psychological 70-cent barrier on Friday. We've seen that come back off today, back down to this 69.60 level, which is where we're currently trading. And that is indeed the chart I have up as a background, because I figured you'd probably much rather look at that than you would look at me. Not that you've got any choice in the matter today. So we'll get into that chart in a little bit. So why have we seen the moves we've seen today on the FX and equity side of things? And the US equity markets are still performing well today. We've got the Dow Jones up another 140 points. But as I said, we've got this quite big reversal in the dollar. And what it really boils down to is the ongoing trade issues which the US is having, or the ongoing trade discussions. It was announced very late on Friday, actually, that the US was not going to put on tariffs onto Mexico. They come to an agreement, which also involved the Mexicans addressing some of the immigration concerns that the US had. So they've got a small window to show that they're serious. And if they do, then tariffs will be avoided on Mexican imports. So this was certainly seen as a bit of a positive, and that explains the move higher in the equity markets. The rhetoric with the trade war with China continues, but obviously there's a school of thought there that says, despite all the rhetoric, at some point they will come to an agreement. I guess we will wait and see. But why is the dollar benefited from this when it was looking so heavy on Friday? And I think part of the reason is that maybe you have a little bit of over positioning from Friday. Maybe the market got itself a little bit short of dollars at not particularly great levels. But I think overall, traders are looking where the dollar is now, looking where interest rates are, and even if you believe the school of thought that the Federal Reserve will cut rates by the end of the year because they see things starting to slow down a little bit and they want to kind of get ahead of that. Two things. Firstly, the US economy is still leading the world, whether you like it or not. It is. It's the strongest economy in the world. And secondly, whilst the Fed were consistently raising rates and cutting back on quantitative easing, following on basically from the global financial crisis, a lot of the other major central banks in the world were static. So we had rates here moving up to 2.5% and beyond, and meanwhile you had rates in the UK, rates in Europe, Switzerland, Canada, Australia. A lot of these places rates were remaining static, and in some places you even had negative interest rates. So even if we do start to see a cut of rates over here, you're still going to have a positive interest rate differential between the US and many other countries. And I think traders have just looked at that and said, maybe the dollar is a good buy on dips. So it doesn't take much for sentiment to change. One tweet out of President Trump and that can all change in a heartbeat. But I think that's sort of been the mindset for today. Just turning very quickly to the chart we have in front of us. So this is this is an hourly chart going back for about just shy of a month. Just the bit I'm really interested in is up here. Since the beginning of the month, we've had a number of attempts here. This line here, support line at 69.55, which we've held. The couple of attempts we've had over 70 cents, as you can see, have all sort of failed. So we're sort of poised a bit here at the moment. On the day today, the 69.55 level is holding. But it's obviously under a fair amount of pressure, and if that fails, then you've got the next major support level really is down here at 69 cents, where we've sort of touched it 1, 2, 3, 4, 5, 6. You can argue 7 different times there. We've touched it, all very close to touching it. You would expect that to be good support, but if we do break here and the US dollar continues to rally, then there might be a possibility to see that level tested again. And the other thing I wanted to point out really with this chart, we've been talking a little bit about the Australian dollar. For those of you I know that are new to foreign exchange that are going to be watching or listening to this video, this is foreign exchange kind of at its finest in a way. We're talking about the Australian dollar, and yet none of the factors or influences, if you like, we've really mentioned have anything to do with the Australian dollar at all. We've mentioned US non-farm payroll data from Friday. We've mentioned US and Mexico trade dispute. We've mentioned US and China trade dispute. There's not one piece of pure Australian dollar news in there. And that's foreign exchange, because you're looking at two currencies with every trade, and things that will affect certainly something like the dollar, are always going to have an effect on the counter currency. And with things like with China as well, Australia can often be used as a little bit of a liquid proxy for China, because the Chinese renminbi can be a little bit tough to access to trade. So Australia can often be used as a little bit of a liquid proxy for that. So it just gives you a little bit of a mindset, the risk on, risk off mindset in foreign exchange, which I mentioned a couple of times last week. The Aussie does get caught up in that, even though there might not be anything specific Australian dollar related going on at that point in time. So just worth watching this level here, 69.55, over the next couple of days, and then support here at 69 to figure. And if we do hold here, then obviously Friday's high around 70.22 will be of interest. And with that, I'm going to cut it short for the day. Wish you the best of luck, and look forward to talking to you tomorrow. Cheers.